we are suspending our evictions. We are no longer going to be party to something that is so unjust.
Cook County Sheriff Tom Dart is taking some drastic action in response to the mortgage meltdown, suspending evictions for the time being. Dart says lenders need to be held accountable for the foreclosure crisis. The banks say he's breaking the law. Dart is here this morning to talk about his action that's making national headlines.
Mayor Daley will play the bad news kid this week when he tells Chicago taxpayers how he's going to close a $420 million budget gap. He cut 240 city jobs on Friday and is threatening more layoffs are coming. But even that's not going to be enough. Alderman George Cardenas is here this morning to talk about what the mayor should cut and what he cannot.
A tumultuous week on Wall Street again. Frozen credit markets and a loss of confidence in the world's financial system resulted in the Dow and S&P's worst week ever. Americans are anxious for answers that they don't seem to be getting from Washington. Financial analyst Rob Stein is here to hopefully clarify some of that confusion.
And
Wall Street ended a wild session with its best showing of the week on Friday, following 7 days of massive losses. The Dow closed down 126 points. Yeah, that's its best showing of the week, ending just above 8,400. The Nasdaq saw a 4-point gain, finishing at 1,600. And despite the continuing plunge in the stock market, the White House is trying to assure Americans that Washington has a handle on the problem. President Bush says the current anxiety about the financial markets is feeding on itself and making it hard to see all that is being done.
It's an anxious time, but the American people can be confident in our economic future. We know what the problems are, we have the tools to fix them, and we're working swiftly to do so.
And we're joined this morning by Rob Stein, a financial analyst and investment manager for Astor Asset Management in Chicago. Rob, thanks for coming in.
Thank you.
You heard the president there. He says the government's done enough. It's just going to take time. Do you buy that?
Well, I agree with him that it's going to take time, and the government hasn't really done anything yet. They've talked about what they're going to be doing, and we'll see what happens over the next few weeks. This isn't an immediate fix like lowering an interest rate and suddenly seeing a reaction to it.
So you say the government hasn't done anything. You mean the money hasn't been moved around, and a lot of these things that have been talked about simply haven't been done yet?
Not yet. They're going to do their first third-party, tri-party agreement hopefully very, very soon. They have lowered interest rates, so they've gotten that process going, and they've continued to do some swapping of what they call toxic assets with the Federal Reserve to put cash back in the system. But as far as buying up the bad mortgage debt and getting the ball rolling, they haven't really done anything yet.
Robin, one idea apparently under consideration is nationalizing at least a portion of some of these banks. Is that a good idea?
I don't think so. I like the free market economy that we have here. I mean, capitalism is what's made this country strong.
It could forever change the capitalistic system in the country, couldn't it?
It probably isn't going to go backwards once they do that. So if it does happen, it'll be a very sad day, and what I think is a change in the system.
Well, what is the argument for nationalizing the banks? Why are they looking at this?
Well, what that does is they want to guarantee each deposit, and they want to guarantee that when a bank makes a loan or borrows from each other, they're not really concerned about the individual's money in the bank, but banks loan and borrow from each other every day to try to keep their balances in order. And right now, not knowing which banks are going to survive, I mean, every week you wake up to who owns WAMU and who owns Wachovia. You want to make sure that when you do these overnight loans that they're going to be fine. And if they can secure and make people confident, make the banks confident that they can lend and borrow from each other, that'll get money flowing through the system. If it's nationalized, you will have the confidence that the full faith and credit of the U.S. government is behind it, and not necessarily Bank of America.
But what that guarantees, it seems, in our society, is that we will not allow financial institutions to fail. And in so doing, we are taking the free market, free enterprise concept and twisting it around in a way that has resulted in a great deal of resentment and anger from many Americans who really, they had the FDIC insurance before. I mean, what are they getting out of this?
Well, the FDIC insurance guarantees the deposits at the banks. That's for that's for us. But really, they're picking and choosing who they're saving and who they're bailing out.
And
more
who is
disturbing.
Doing the picking and choosing? Is it Mr. Paulson, Hank Paulson?
Paulson, Sheila Bair from the FDIC, Ben Bernanke from the Federal Reserve, and Barney Frank and a variety of people.
And what criteria is being used to decide which banks are saved and which ones will not be?
Right. Well, I wish you knew, because you would invest aggressively there knowing that the government was going to bail them out. But I think it has to do with the domino, the proverbial domino impact of, if that fails, what do they own, what's on the other side of that transaction, and they come in and make a decision based on how toxic it will be.
I want to read you a quote.
Or at least that's what they're trying to say.
A story from a trader on Friday said, "Fear has been running rampant all over the street. Fear and greed, that's what rules the street. I think the carcass has been stripped to the bone." Do you think it's time to maybe, if we reached a floor, I know they're difficult to predict, but is it time for the long-term investor to maybe start nibbling on some stocks?
We've probably reached a short-term floor, if you will. Based on valuation alone, the market's moved 40% in a very short period of time. But the economy is still contracting. We're still coming off of the good periods we had 2-3 years ago, and there's no bright signs in employment. GDP is probably going to be down in the fourth quarter. So purely based on economic fundamentals, it's hard to make an argument to start buying. But when things that are very good have declined by 30, 40, and in some cases 50%, sure, I think you can nibble. Biotech is an area that I think you could start looking at. Same thing with some healthcare-related stocks.
Rob, am I wrong in assuming that the key to this is still real estate values in the United States, and the fact that we have not really established what those values are in the current marketplace?
That was the beginning cancer, if you will. The real estate values are what supported the value of the debt and the securities that were created because of them. But what's happened recently is a credit crunch, a credit breakdown, a clogging of the pipe. Not just the real estate market that's declining and the security to it. Banks are not lending with each other. And if they don't lend with each other, they don't have money to lend to the general population.
But even if we break that crunch, we still don't address what are real estate values like in the United States right now. How much is that paper really worth? How many mortgages really cover the value of the property, or more importantly, does the value of the property actually cover the mortgage? I mean, when will we reach the bottom of the real estate market?
Well, that's a tough question to answer, when we'll reach the bottom, because right now you've got to work off supply, but you can't even buy a home figuratively because if the credit isn't there. So you can't even decide the value of a house until you can get a willing buyer, a price that the seller is willing to sell at, and somebody that'll finance the transaction. And since nobody's financing transactions right now, I mean, not nobody, but it's a very challenging
environment. It's a very difficult procedure.
It's hard to find out where fair value is because you don't have all three pieces of the puzzle put together.
Rob, what are you telling your clients right now who are heavily invested in stocks and are freaking out as they watch their 401ks and portfolios disappear? Do they just hang on? You know,
at Astor we have an economic model, and we had looked in early January at the employment trends and gotten out of the market. So our investors have fared well during this period of time. We've actually made money this month, and we are going to start nibbling on stocks based on valuation. When the fundamentals change, we'll aggressively get into the markets and hang on for a long period of time. But precious metals are still good. You can buy some commodity-related products, and like I said, biotech I think is good to start nibbling on here as well.
The Washington Post suggested last week that what we're really seeing here is the end of capitalism as we know it, and that particularly the move to nationalize banks presages a new era, not only in the United States but around the world. Would you agree?
Yeah, it's one of the things that concerns me most. In my new book, I'm actually writing a specific chapter about that. Like the game Monopoly that actually has a winner and a loser. Yes. It would be very scary if the capitalist democracy that we live in too has a winner and we go to a different type of society and business format. I hope it doesn't come to that.
Rob, thank you very much.
Thank you.
Scary times.